Assalamualaikum and good morning everyone. My name is Norelisha and I will present about the Afin Bank Berhad. Afin Bank is one of the Malaysia's leading financial institutions that provide banking and financial services to individual, businesses and corporate clients. It was first established in 1975 as Perwira Habib Bank Berhad through a joint venture between Perbadan and National Berhad, also known as the Pernas and Habib Bank Limited. And today, Afin Bank continues to strengthen its position in the Malaysian banking industry by offering a wide range of conventional and Islamic banking services to their customers. As for February 2025, Afin Bank has a network of 154 branches in Malaysia. Afin Bank Berhad also operates as the financial holding entity of Afin Islamic Bank Berhad, Afin Huang Investment Bank Berhad, and Afin Money Broker Senior Berhad. The bank provides services such as savings and current account, financing, credit facilities, investment product, and wealth management solution. It also offers Islamic banking services through Afin Islamic Bank to meet the needs of customers who require Sharia-compliant financial product. Moving on to the management structure, Afin Bank is a part of the wider Afin group structure. At the top level, it is led by the board of directors who are responsible for decision making. Below the board is the chief executive officer who manage daily operation of the bank. The CEO is supported by department heads such as retail banking, corporate banking, Islamic banking, and finance. Each department has a staff responsible for specific tasks to ensure the bank runs smoothly. And now I will explain the key financial indicators of Afibank. The key financial indicators are important to evaluate the bank financial performances. Some of the main indicators include revenue, profit after tax, total asset, and return on equity. Revenue shows the total income earned by the bank from its banking operation and financial services. Profit after tax indicates the amount of profit the bank retains after all expenses and taxes has been deducted. Total asset represents the overall value of resources owned by the bank, including loans, investment, and cash holding. Meanwhile, return in equity measures how effectively the bank uses shareholder funds to generate profits. These indicators provide clear and reliable information about Afin Bank's financial performances and profitability. They help management make strategic decisions and enable other stakeholders to assess the bank's overall stability and growth. And now, I would like to explain the market positioning of Afin Bank. Market positioning refers to how a company differentiates itself from its competitors and creates a unique image in the minds of customers. Afin Bank positions itself as a customer-centric, quality-driven, and innovation-focused financial institution. This strategy allows the bank to attract a wide range of customers while maintaining its competitiveness in the Malaysian banking industry. Firstly, Afin Bank adopt a customer-based positioning strategy. The bank focuses on delivering personalized financial solutions that cater to the specific needs of different customer segments, including individual, small and medium-sized enterprises, and larger corporate clients. For individual customers, Afin Bank provide products such as saving accounts, personal financing, and mortgage services. For businesses, the bank offers financial solutions and business advisory support. Secondly, Afin Bank emphasizes a quality-based positioning strategy. The bank is committed to delivering secure and reliable banking services. Customers' trust is extremely important because customers trust bank with their money and financial information. Therefore, Afin Bank maintain high service standards through effective risk management practices and strict compliances with regulatory requirements. As a result, customers can have a greater confidence in conducting their financial activities with Afin Bank. Thirdly, Afin Bank follows an innovation-based positioning strategy to adapt to the changing needs of customers. The bank invests in digital transformation and to enhance the customer experience. Through the digital banking platforms and mobile banking applications, customers can perform various banking transactions such as fund transfer, bill payment, and account monitoring anytime and everywhere. Afin Bank also implements advanced cybersecurity measures and security technologies to protect customers' data from cyber threats and online fraud. Furthermore, Afin Bank focuses on innovation and support its goals to becoming a modern and customers-oriented bank. As more customers prefer digital banking services, the bank continues to improve its digital capabilities to meet customers' expectations.
Hi, my name is Deno Valnadanya. Now I will be presenting three of Afin Bank's main products and services. Afin Always Digital Banking, Afin Bank Credit Cards, and Afin Islamic Banking. For each product, I will explain its features, benefits, and potential drawbacks. First, let's look at Afin Always Digital Banking. Afin Always is Afin Bank digital banking platform that allows customers to perform banking transactions anytime and anywhere using their mobile phones or computers. Customers can transfer funds through Do It Now or IBG, pay utility bills and credit card bills, check their account balances and transaction history, download e-statement, and manage their debit cards and credit cards. The platform also supports Do It Now QR payments for cashless purchases and provides real-time transaction notifications to help customers monitor their accounts. The main benefit of this service is convenience. Customers can access banking service 24 hours a day without visiting a physical branch, which saves both time and travel costs. Transactions such as fund transfer and bill payments can be completed within minutes. In addition, customers can monitor their spending and account activities in real time, making it easier to manage their finances. Cashless payment through Do It Now QR also supports Malaysia's move towards a digital economy. However, there are some drawbacks. Digital banking depends on a stable internet connection and compatible device. Customers may also face cybersecurity risks such as phishing, scam, or fake banking website. Therefore, it is important to use strong password, never share OTPs, and avoid clicking suspicious links. Next, let's move on to AffinBank credit cards. AffinBanks offer a variety of credit cards with attractive features. Customers can enjoy cashback on selected purchases, earn reward points that can be redeemed for gift or air miles, and receive travel privilege such as airport lounge access and travel insurance. The cards also support contactless payment for faster and more convenient transaction, and customers can easily manage their card through the Affin Always mobile app. The benefits of these credit cards include convenient cashless payments, exclusive rewards, and greater financial flexibility. Credit cards are especially useful during emergencies or unexpected expenses. In addition, customers who make repayments on time can build a good credit history, which may improve their chances of obtaining future financing or loan. On the other hand, credit cards also have potential drawbacks. Customers who fail to pay their balance in full may be charged high interest and late payment fees. The convenience of credit cards may also encourage overspending, leading to financial difficulties. There is also risk of fraud or unauthorized transaction if card details are not properly. Finally, let's discuss Affin Islamic Banking. Affin Islamic offers a wide range of Sharia-compliant financial products, including savings and current accounts, home financing, vehicle financing, business financing, and investment products. Unlike conventional banking, these products are based on Islamic contracts such as murabahah, musyarakah, ijara, and wakalah instead of interest of riba. All products are reviewed and approved by the Bank Syariah Committee to ensure they comply with Islamic principles. The biggest benefit of Affin Islamic is that it provides ethical and interest-free financial solutions. The products promote fairness, transparency, and risk sharing between the bank and its customer. They are suitable not only for Muslims but also for non-Muslims who prefer ethical banking practices. However, some Islamic banking products have more complex contractual structure compared to conventional banking. Customers may need more time to understand how the different Sharia contract work. In addition, certain products require more documentation and compliance, which make the application processes slightly longer. In conclusion, Affin banks offer a wide range of banking products that meet different customer needs, whether through a digital banking, credit cards, or Islamic banking services. Each product provides unique benefits while also having certain limitations. Therefore, customers should carefully evaluate their financial needs and use this product responsibly to maximize their
Now, I will explain the impact of digitalization on Affin Bank. Overall, digitalization has significantly strengthened Affin Bank's competitiveness by improving customer convenience and operational efficiency. However, the bank must continue enhancing its cybersecurity measures and digital innovations to meet customers' evolving expectations. Firstly, let's look at the impact on banking operations. Digitalization has enabled Affin Bank to process transactions much faster through its digital platforms. This reduces customers' waiting time and improves the overall banking experience. In addition, the bank has lowered its operational costs by reducing paperwork and replacing many manual processes with automated systems. As digital banking continues to grow, Affin Banking has also increased its investment in cybersecurity to protect customers' data and ensure secure online transactions. Secondly, let's discuss the financial landscape. The rise of digitalization has increased competition from fintech companies and digital banks, encouraging traditional banks like Affin Bank to innovate continuously. At the same time, digital banking supports Malaysia's transition towards a cashless economy by promoting online payments and digital financial services. As a result, banks are continuously improving their products and services to remain competitive in the industry. Lastly, let's examine the changes in customer behavior. Today, customers prefer banking services that are fast, convenient, and accessible at any time. Affin Bank addresses this need through its Affin Always mobile application, which allows customers to perform banking transactions 24 hours a day, 7 days a week. Digitalization has also encouraged a greater adoption of cashless payment methods, such as online transfers, QR payments, and e-wallet. Consequently, fewer customers need to visit physical bank branches because most banking services cannot be completed through digital platforms. In conclusion, digitalization has brought many positive impacts to Afin Bank by improving operational efficiency, increasing competitiveness, and enhancing customer convenience. Moving forward, the bank should continue investing in cybersecurity and digital innovation to maintain customer trust and stay competitive in the rapidly evolving banking industry. Thank you.
Hello everyone, my name is Karen Abisha. So today I will begin the financial ratio analysis with the profitability ratio. Profitability ratio measures the bank's ability to generate profit and evaluate how efficiently it uses its resources. So in this section, I will discuss 4 key ratios which are return on asset (ROE), return on equity (ROE), spread, and also net interest margin (NIM) by comparing the result for 2024 and 2025. First, let's take a look at the return on asset (ROE). ROE measures how efficiently the bank uses its asset to generate profit. So in 2024, the ROA was 0.6%, while in 2025 it decreased slightly to 0.44%. So this small decline indicates that the bank becomes slightly less efficient in utilizing its asset to generate profit. So overall, the bank's performance in asset profitability declined slightly in 2025. Next is return on equity (ROE). ROE measures how effectively the bank generates return for its shareholders. The ratio increased slightly from 4.39% in 2024 to 4.42% in 2025. This improvement shows that the bank generates slightly better returns on shareholders' equity. I will move on to the net interest margin (NIM). So NIM measures how efficiently the bank earns profit from its interest earning assets. The ratio increased from 2.08% in 2024 to 2.11% in 2025. This improvement indicates that the bank managed its interest earning activities more effectively. And the last one is the spread ratio. Spread measures the difference between the interest earned on loans and the interest paid on the customer deposits. In 2024, the spread was 1.28%, while in 2025 it decreased to 1.13%. This decline indicates that the bank earned a smaller margin from its lending activities. I will continue with liquidity ratio. Liquidity ratio measures the bank's ability to meet its short-term obligation and manage its cash effectively. In this section, I will discuss 2 key ratios, which are loans to total assets and liquid asset to total asset ratio by comparing the result for 2024 and 2025. Firstly, let's look at the loans to total asset ratio. The loans to total asset ratio measures the proportion of the bank's assets that are allocated to loans. So, in 2024, the ratio was 63.39%, while in 2025, it decreased slightly to 63.31%. The small decrease of 0.08% shows that the bank maintained a stable lending strategy. Overall, this indicates consistent loan management and a balanced use of assets, so the bank's performance remains stable. And lastly, the liquid asset to total asset ratio. Liquid asset to total asset ratio measures the proportion of the bank's assets that are held in liquid assets. The ratio increased from 2.55% in 2024 to 4.96% in 2025. So this improvement shows that the bank strengthened its liquidity position and become better able to meet its short-term obligation. Overall, Afin Bank performed better in liquidity management in 2025.
Hello everyone, I am Nur Adina Firzana. Moving on, I will focus on 3 other critical pillars, which are asset quality, capital adequacy, and management soundness, to see exactly where we are thriving and where we need to tighten the reins. First, let's look at asset quality, which essentially measures the health of our loan portfolio and how well we manage credit risk. In asset quality, we will focus on 3 other components, which is NPL, loan to deposit, and deposit to shareholder funds. Looking at the numbers, our non-performing loan NPL ratio showed a fantastic improvement, dropping from 1.97% in 2024 down to 1.66% in 2025. This means a lower percentage of our loans are at a risk of default, indicating stronger credit risk management. Meanwhile, our loan-to-deposit ratio increased from 96.13% to 99.43%. While this shows we are highly efficient in deploying our deposit into interest-earning loans, our ratio this close to 100% means our liquidity cushion is getting tight. This is coupled with our deposit to shareholder fund slightly increasing from 6.36 times to 6.47 times, meaning we are relying slightly more on external deposits than our own equity. In terms of credit health, the bank is performing better due to lower bad loans. However, our liquidity management needs caution as we are stretching our deposit base to its upper limits. Next up is capital adequacy. This measures the bank's financial shock absorber, basically Afin Bank's ability to withstand unexpected losses and protect their depositors. There are 2 components in capital adequacy, which are capital to risk weighted assets and core capital ratio. Our capital to risk weighted assets RWA ratio, which combines Tier 1 and Tier 2 capital strengthened from 17.6% in 2024 to 17.28% in 2025. This tells us that Bank's total capital base is growing faster than their risk exposure, providing a solid safety net. Drilling deeper into the highest quality capital, which is core capital ratio, Tier 1 also improved, moving from 14.63% up to 14.77%. The bank is performing better and standing on a firmer ground. Bank has increased their financial resilience, meaning they are well buffered against market volatility and fully compliant with stringent regulatory standards. Finally, let's evaluate management soundness. Management soundness refers to the ability and effectiveness of a bank's management team in managing the bank's operations, risk, and resource properly. Let's take a look at the administrative expenses to total expenditure ratio to see how efficiently leadership is managing operational costs relative to overall spending. In 2024, administrative expenses made up to 43.40% of AFIN's total expenditure. However, in 2025, this metric ticked upward to 45.04%. This interpretation tells us that internal overhead, paperwork, and day-to-day administrative running costs are consuming a larger piece of AFIN Bank's spending pie. In the specific operational area, the bank is performing slightly worse. The rising ratio suggests an increase in internal overheads. Management needs to look into cost control measures or digital automation to streamline these administrative expenses and bring operational efficiency back on track.
To conclude, Afin banks have served both individuals and businesses to a wide range of banking and financial services. Since its establishment, the bank has continuously adapted to the industry changes and strengthened its position in the Malaysian banking sector. Based on our financial analysis, several key indicators were evaluated. The results indicate that Afin Bank has maintained strong profitability, financial stability, and efficient management performances. And overall, Afin Bank's ability to manage its resources effectively control risk, and meet customers' needs demonstrate its strong market position and growth potential in the future.